Hey everyone, welcome. So first of all, I am not a financial advisor and this is not financial advice. This is simply information that I'm looking to share for entertainment purposes. That's the legal disclaimer. Now that we're done with that, I will explain the title of this presentation, Seeing Around Corners, in another couple of slides. I do plan to produce more videos and hold more Zoom rooms and write more posts on Facebook about this new digital economy being put into place. This may not be on your radar that much right now, but soon it's going to be a major topic in the media and also a big part of our lives. I always like to take a top-down approach to things. So with this first video, we're going to be looking at some important background and fundamental information. The better educated we are on these things, the better decisions we'll all be able to make for ourselves and our loved ones. I would recommend that perhaps you grab a pen and paper to jot some things down and pause the video throughout, maybe watch it a second time. And then you can feel free to submit any questions into the Facebook group or to PM me. Or also, I would recommend using Google or ChatGPT, one of those, or Grok, one of those programs, to do more research on this stuff so that you understand it even better. This is a pretty basic presentation because there's so much to learn. But anyhow, we're going to be going forward with this. One of the reasons, too, that I want to present this, other than it being important in and of itself, I'm going to discuss on our next slide, which you're seeing now. This is from today. I just added this slide to the beginning of the presentation right before I started because so today's April 6, 2026. So I was looking at some videos on YouTube around this topic of crypto and couldn't help but notice that there was a whole bunch of them, these are all from today. And these are ones that are particularly focused on Bitcoin, which is the biggest of all the cryptos, but it could be just crypto in general. But they're all focused on Bitcoin, which makes it even more interesting. And what you see, I can summarize for you, is across the top three, they are all very drastic looking that Bitcoin's in trouble and Bitcoin's going to drop and it's the end of the world for Bitcoin, as you can see just by the headlines. These YouTubers love to produce these dramatic title images for their videos. Then when you look at the bottom three, again, all taken today, same day, the bottom three are telling you how great Bitcoin's about to do any minute now, final 24 hours. It's incoming. So the lesson here I just wanted to share, and I've gained this experience myself over the past couple of years so you can avoid the pitfalls, is that these YouTubers are looking for views, for clicks, whatever you call it. And I mean, some of them are better than others. Most of them, though, are just very reactionary. They get some ideas and they make a video. They're putting videos out every day because they have to keep their audience going. So I would be very careful about YouTube videos. There are a couple I would still recommend that are more mature voices that do a lot of interviews with experts in the field rather than just talking about their thoughts for the day. So this slide is just there at the beginning to show you what one of the pitfalls can be. The video that I'm making here is not anything like these. We're going to be looking, as I mentioned, at some pretty fundamental things that you need to know, as well as some insights on things you should be aware of in terms of if you do want to get involved a bit now with purchasing crypto or anything like that. So we'll move forward from here. First of all, a little bit about myself. I am 68 years old. I started looking into this whole global economy and single currency ideas back in the 1980s. For those of you who aren't aware of history back then, we were having a lot of global issues with the Soviet Union, and in the 80s with Ronald Reagan and Mikhail Gorbachev of Russia, Soviet Union. they work together to change the whole atmosphere really on the planet from one of being fearful, suspicious, and no cooperation to starting to work together in a much better environment. And this opened the door for discussions on cooperating with things like trade and finance and things of this nature. So there started to become, in the media, started having more articles and things on television regarding this. And back then, getting information was pretty much TV and paper media like magazines. There's one in the bottom right-hand corner you'll see called The Economist. I had a subscription to this back in the day. This is from January of '88. If you look down in the fine print, I was 29 years old still at that time, and the cover is pretty interesting. Get ready for a world currency. And it predicted, if you read to the left, that in 30 years' time there might be such a thing. They thought of the name the Phoenix would be cool for this. It sounds like something out of the Harry Potter series. Nonetheless, we're 30 years later. We didn't get to that stage, but what is interesting is that would have taken us to 2018, which is right around when crypto really started to gain some traction. In fact, most of the discussions about how crypto has performed and might perform usually go back to the 2017 year because there's a 4-year cycle that things were following more or less for a while with crypto. There's a business cycle, a Bitcoin cycle. There's different cycles in economic study. And so 2017 to 2018, they're pretty close to at least something coming together. We're going to talk a little bit in this video about how we got to this point, a little bit of background regarding money and banking system, and now evolving into crypto. We'll discuss some of the basics around basic knowledge that you need to know, that's really important to know, some basics about buying and selling, and of course, everyone's favorite subject, paying taxes. I've got some information for you on that too. So for next year, when you might be paying taxes if you own crypto, that'll be helpful. And then we're going to look a little bit at what it would be like to do some purchasing and selling, as we call it, trading of crypto. First, we'll look at what different sectors in the crypto sphere. So there's not all cryptocurrencies are just bland and have no meaning to them. They do fall in different sectors. You have some that are in finance or AI or what's called real world assets. There's lots of sectors, but there's some that are more important now than others. So we'll be looking at that and certain fundamentals about how to understand the tokens, the coins that are in those, what some of the catalysts are that might cause crypto to start doing better this year as a whole, as well as what may cause certain ones to do better for some period of time. And another more recent key topic is the artificial intelligence and the use of AI, both from our perspective as an individual person and user, and also from the perspective of large institutions that can really do things with AI that beyond our capacity that we have to be aware of because they can easily manipulate markets doing things like that. And then we'll put together perhaps like our own little simulated portfolio to discuss what ideas make sense right now as I do this in April 2026. So the gentleman on the screen, Jensen Huang, is the CEO of NVIDIA, which as of the last time I looked is the largest company in the world by market cap. It's always in the top 3 or so. I was watching an interview with him. He's a very interesting guy. Obviously, he's pretty smart to run a company like that. And the interviewer asked him, it was kind of funny. She said, so tell us who you think the smartest person in the world is. So I kind of leaned forward to hear what he was going to say. And he very politely and humbly said that he didn't want to name like a single person like that. However, he would say, and then the following quote, the smartest people in the world are those who can see around corners, which is the title of this presentation. And he broke this down into two components. And that is one, people who have command of the data or the facts that are out there, that you really understand the real stuff. And then also is interesting, you then follow that up with saying that people who understand the vibe, so what's going out there in the public space. And I found that quite fascinating, as basically you're dealing here with intellect and emotion, and that determines what our actions are. And just like in everyday life, when we start making decisions based on emotions, we often find ourselves making mistakes instead of using our minds and really coming up with the right plan or the right action to take. And this is the same uh, in crypto, because when it's your money at stake, of course, and you see your crypto going up or down, you get excited and you might react, or just crypto in general. And an example of this actually would be last October, where gold hit the highest price it had ever hit. And that was all over the media for a whole day. And there's a lesson there to be had. And the next day, the media was showing people all around the world lined up everywhere to buy gold. People that had no interest in it, but they got all excited and anxious over the prospect of, becoming rich or making a lot more money by putting their money into gold. And I think it was about 24 hours later, gold dropped 5% in price. So all those people that lined up that day and put tons of money into gold lost 5% of their investment within another day. And it was all an emotional reaction. And that goes back to what I said a few minutes ago about um, being manipulated, that there are ways that it is possible to manipulate much of the public through the media. So what we're looking at on this next slide that I created is kind of a history or evolution of money, where way, way back before we had such a thing, people just traded things. If you had tools and I had chickens, we could swap a hammer for some eggs or something like that. And it was a barter system before there was any kind of asset that we could use other than directly trading things. And one of the first things that came around was precious metals, especially gold. And this led to something interesting in that someone else, a third party, was creating or finding the gold for us. And also, if we wanted to store it somewhere safe, we would store it maybe in the king's palace or something like that eventually, and then later in banks or other heavily fortified institutions. So the point here being that there became a third party and more or less a centralized authority, if you will, in terms of creating this and getting it out to people. And that continued with the creation of metal coins, which of course had to be real. They had to have an authority behind them. So again, you had a centralized institution of sorts creating these for people. That continued even more so with the idea of paper money, which of course required a lot more of that, because now, paper money is a lot easier to forge than a coin. And it moved forward as we got into the last 100 years or so of plastic credit cards, where now you had banks issuing these things and everything went through the banks. And then now, much more in our generation, we have electronic money and things like PayPal or Venmo, things like that, where we can move money around. But again, there's a third party that has a measure of control in between everything and dictating rules and policies and charging us fees and all of that. So that's where we've been until very recently. This all developed along the same path of greater institutional involvement and centralized control. Now, along comes the new kid on the block, cryptocurrency, which first started with Bitcoin, probably about, I think it was like 17 years ago. And that's why Bitcoin is so big, and we'll get into that later. It was the only party in town for a while. But we're now looking at something that is not under the control of a government or a bank or something like that. Cryptocurrency is electronic money. It's digital. It's out there, and there's no real like regulation, so to speak, on it. It's kind of a big trusted network with a lot of safeguards, of course. But that creates a problem now because, in a sense, it's almost like we're going back to the barter system. Hence the title of this slide, or the other on the right there, from cattle to crypto. There is a sense of getting away from having to deal with a third party or a centralized authority. So crypto is called, essentially the word you'll hear is decentralized. You'll hear that a lot. Or we have traditional finance, which is nicknamed TradFi. And then you have decentralized finance, which is crypto, which is nicknamed DeFi, DFI. And when something new like this is coming in, it's more or less a threat to the existing system, which has been around for decades now, and is very comfortable in, making a lot of money off of us. And so there is a major area of conflict that has been emerging, especially of late, as crypto suddenly has caught fire, if you will, in terms of governments and all kinds of other institutions seeing the value that it brings, and to banks too. But nonetheless, they are threatened by the idea, mostly that people will be taking money out of savings accounts and putting it into crypto, particularly in something called stable coins, which we can talk about later, which can give yield or interest to people at a much higher rate than banks can give. And that's actually the big battle going on right now in the United States Congress over something called the Market Structure Bill, or also called the Clarity Act, which has been stalled for a while because there's a big fight between the crypto companies and the banks, essentially, and whoever in Congress that they have in their pocket fighting for their side, which, well, we won't get into the politics right now, but there is a conflict right now, and we're in the midst of this. Everything is absolutely 100% heading toward crypto, toward digital currency. And it's not like that's going to wipe out the banking system. Rather, they have to adapt to it. And frankly, they were ignoring it quite a bit for years, and we'll talk about that more in a bit, and need more time to play catch up. So part of what's going on also in Congress is stalling things as long as possible until they can get their act together, because they don't want the public coming in and starting to buy a lot of crypto right now, because that would cause the prices to go up of the currency. That's how you get value. One of the ways you get value is people putting more money into a token, and they're not ready for that. So they don't want to have to offer it to their customers or buy it themselves later at a higher price. They want to keep the price low for now. So that's another kind of behind the scenes thing that's going on. But anyhow, that is the conflict zone, as I call it, between the two right now, that will eventually get resolved, but it's quite something to follow what's going on in Congress right now. As I mentioned, it's not like the banks can stop this, and nor is it like it's going to put them out of business. So over time, they have been slowly changing their minds and adapting to things. Because this is, for the first time, a global payment network that can exist without them, without a bank clearing the transaction, or a central authority, like I mentioned, maintaining some type of ledger on everybody and tracking everything. So this does challenge a lot of the traditional bank roles that have been in place for centuries, that were acting as the trusted middleman, and of course taking a lot of money for that benefit to us. So even though crypto isn't going to replace banks. It is pressuring them to modernize quickly and lower their cost and rethink their whole role in the world. Because there's a lot more to this than just simply a new type of way to pay for things, as we'll discuss in a bit. So what we have here, I selected 4 individuals to show you how their views of cryptocurrency have changed of late. And we're going to go across from left to right here. 4 different types of people. The first is in the world of investments, not banking, but investment. And his name's Larry Fink. Now, he's the CEO of BlackRock. And BlackRock is a financial management company, and they are the largest in the world. They manage close to 15 trillion with a T dollars in assets. So they're the biggest financial management company in the world. He's also happens to be the co-chair of the World Economic Forum, the co-chair of their trustees. He was very active at their meeting in January, which we will discuss as well shortly. And that's quite a powerful person to be in those 2 positions, because the WEF, the World Economic Forum, brings together all the political and business leaders and banking people of the world to determine, what they're going to do and where things are heading for all of us. And he's calling a lot of the shots for that, and also BlackRock. And as recently as 2024, and all through those years, for many years, he was calling crypto, basically equated it with money, away from money laundering, which I'm sure some of that has been done. Money laundering has been done in a lot of ways, but perhaps easier with electronic money, because it does have an anonymous feature to it. But lately, he's changed his tune now, and he's calling it a legitimate financial instrument. And I'll give him credit. He has owned up to the fact. He said in many interviews I've seen him talk, he said, yes, I have changed my mind completely. I admit it. And so that's, at least honest to that degree. And anyhow, he is a very powerful figure. Moving over to the right, one more thing about Larry. He's also pushing, and actually we'll talk more about this later, for something called tokenization, which is the idea of taking, things that you can buy, not candy bars and stuff like that, but like automobiles and real estate and financial instruments, and putting those on what's called the blockchain, which is the whole electronic ledger for crypto. So he's really pushing that in all his interviews now. So over next to him is Jamie Dimon, the CEO of JP Morgan Chase. This is another major player, because JP Morgan's the biggest bank in the US and about the 5th biggest on the planet, I think. And he was calling it Ponzi schemes. So it was money laundering from Larry and Ponzi schemes from Jamie. And now he's saying crypto is real. It will be used by all of us. And he's giving much more positive recommendations. And JP Morgan is bringing crypto onto their platform and offering it to customers and things like this. So what's real interesting here, very interesting, goes back to something I said earlier, is that about 1 year ago, almost exactly, I was watching Jamie Dimon on one of those, I think CSNBC shows. They had him on interviewing him, and he was talking down on crypto. So just a year ago, he was still less spring. He was still talking down on crypto. And at the same time, literally the same day, I was working, doing some research, and I was looking at a crypto event was going on in Hong Kong, on the other side of the world. And lo and behold, who is sponsoring the crypto event but JP Morgan Chase? They were one of the sponsors. So while he's over here telling everyone, Americans, their customers, keep away from it, he's over on the other side of the world, or JP Morgan is on the other side of the world, promoting their efforts in it. So you can see some of the games being played there. And again, why would they do this? Well, again, I would theorize it's they don't want people buying it just yet, because they are playing catch up. Now move over to politics. We have Democrat Gary Gensler, the Securities and Exchange Commission chair, and that's the SEC is a big deal regarding legal aspects to all of this stuff. And he was calling it fraud, scams, and abuse. So let's add that to the pile. As recently as 24, when he was still working. And this was under the Biden administration. And then toward the end, or at some point, he was saying crypto could have real utility. So you can see a change of tune there. And the administration was extremely hostile to crypto. Gensler's SEC had filed over 125 or more, I think, lawsuits against crypto companies, and they were all frivolous. They've all gone away now. They've all been dismissed. And he was doing this for no reason anyone could figure out other than the obvious, which was just, keeping crypto at bay, just holding it back, which of course is kind of an interesting thing why you would do that, because the rest of the world is, especially Europe, is ahead of the US in terms of passing legislation and things like that. So we're playing catch up with the rest of the planet in a sense regarding crypto. And this is one of those things that what you would call a first mover advantage, where whoever gets in with this first is going to do well, and you don't want to be the ones playing catch up. So it was kind of confusing and not too good that this was going on. But that's all ended with the new administration. But even Donald Trump, I didn't find a more recent quote. I had to go back to 2019, where he was saying crypto, may have been Bitcoin, but crypto in general is based on thin air. And that was a lot of people's opinions too back then. That was 7 years ago. And now, of course, you hear him touting all the time that the United States is going to be the crypto capital of the world. And he's hired all kinds of people in his administration that are. It's almost like you had to have it on your resume. You have to be a very pro-crypto person, and his new SEC chair is very pro-crypto, as are other people that he's had leading the charge in Congress, trying to get this Clarity Act passed through Congress. So the bottom line here is crypto is forcing the whole banking industry to rethink everything, because there's so many things that crypto does and does better than banks. So they have to up their game. As mentioned, you can make payments, transfer money, etc., without intermediaries. I mean, there are little fees you still have to pay, just like when you buy stocks or something, but you don't have to deal with that middleman. The other interesting thing too, regarding like trading crypto around the world, or purchasing and buying it, is it's 24/7. The crypto is not like the stock market, which is open only so often. I actually looked into this, and the stock market is open about 252 days a year. You figure holidays and weekends, about 6.5 hours a day. So that's 1,683 hours in a year, compared to, well, if you do the math of 365 days, 24 hours a day, that's 8,760. So it's open 18.7% of the time, the stock market, compared to crypto, which is five. So crypto is 5 times more in terms of how open for business it is, which of course makes people's eyes go real big, big investors, but also the little guys like us, have the ability to go online anytime we want and check our crypto and make a trade if we want to sell something or buy something. So that's a big deal to both the big institutions as well as the public. And crypto is programmable money. It's electronic. So some cryptocurrencies have what's called smart contracts built within them. And this goes back to the tokenization thing I was mentioning earlier. We'll talk about that more in a minute, where you can actually have contracts within a crypto token. So if you were going to purchase something in the near future of value, all the like legal paperwork and everything in there that can take time and money and hassles is already going to be built into the token. So things are going to be a lot easier, a lot more secure, and cheaper. So that's something banks have to consider too, in terms of, competition. Self-custody, again, it's your crypto, you can put it in what's called a crypto wallet, and it's there and it's yours, and you don't need a savings account with a bank or anything like that. And then in general, there's competition for financial services because DeFi, as I mentioned, decentralized finance platforms, they replicate services like lending, trading, and interest earning without having to deal with traditional banks. And I'll show you some examples of that shortly. And there's just pressure for digital innovation. Many governments and banks are exploring digital currencies right now to modernize. So the banks are under a lot of pressure and they're working very hard, and we'll see what we mean by that here. If we go back to 2020, banks were pretty much just keeping a lazy eye on crypto. Much has happened in the 5 or 6 years since then, especially with this pro-crypto administration being in office in the United States. That's been a complete shift. So banks have gone from just keeping like I said, not really caring too much about it, to ridiculing it, to attacking it, and they've been pretty hush hush too about anything they might have been involved with, as I mentioned with the J.P. Morgan stuff earlier. But everything has changed in the last 6 years because now they are directing massive amounts of money internally into their budgets in terms of the architecture they need as it relates to the blockchain, that electronic ledger. Also, like internally, they have to change this. This isn't like just adding a new type of checking account or something. This is massively, complex, and they have to find ways to connect their existing system. They're not going to wipe it all out to how crypto functions, and then you're going to have all kinds of things of training issues and new materials to print and yada yada, so on. So there's a lot of money to spend, and then they're starting to develop their own products. Banks are already talking about, or are in the process of creating their own stable coins that they can use to move money back and forth electronically. A stable coin is a cryptocurrency, but it's not one that goes up and down like other cryptos can do. They're pegged, as it's the term, or directly connected to a hard asset like U.S. Treasury bills, so that you buy a stable coin at $1 today, and it's going to be pretty much $1 tomorrow and the next day. So it's just used to move money without the idea of hoping that it goes up in price like other cryptos. So that's what basically the short version of what a stable coin is. So anyhow, they've really changed their tune. And one of the things that relates to all of this is right now when large banks want to deal with banks in other countries, and you're talking about, of course, different currencies, they have to keep a certain amount of money in their vaults for each currency that they deal with around the world. In order to have liquidity to make these transactions occur. They have to keep a pretty good stash of money. So if you're dealing with one country, you might have to keep pesos or lira or rubles or yen, all in accounts. And and the other banks do the same. They have to keep like US dollars in vaults to do this. And these are called Nostro Vostro accounts. Nostro Vostro being Latin terms that relate to, like, if you speak French or Italian or Spanish, you might recognize, like in French, you have nous and vous, which is us and you, or ours and yours. So that's what it means. It reflects the idea that I got to keep some of your money and you got to keep some of mine. And the sum of this money around the world is upwards near 27 trillion, with a T again, dollars. And it's just sitting there in these accounts all the time, used when it's needed, and it just sits there. And with crypto, that won't be necessary, and that's a complex thing to explain, but it just won't be. And this will free up $27 trillion for global investment, or whatever you want whatever you want to call it. But so that gets a lot of eyeballs getting really big there. That idea of $27 trillion suddenly becoming available to do something with and things. So that's one of the catalysts for the banks to get moving here. There's clear benefit for the banks as well. The big problem is just that they're lagging. This next slide, we've got just a couple more of these that are like background stuff, but this is all good to know. So this next slide, this is actually the cover or the top of an article recently. I think it was just from a couple of months ago. And the title, Institutional Adoption Trends in Digital Asset Markets. What this is reflecting is now that the banks are starting to see the light and starting to move on things, the next thing is the publications, the industry publications for the financial world are starting to, get involved and send reporters and write articles and all of that, which of course now you've got the snowball going downhill effect, because now everybody that has anything to do with the financial world is realizing that the banks are heading in this direction 100%. They better get their act together too. So everybody is more or less going to be forced to get on board with digital assets in the next year or so, especially. And this goes back to what I said at the beginning, that it will eventually impact all of our lives. No ifs, ands, or buts. You can sit here and say, I'll never buy crypto. And I got news for you. You may not have an option in the near future. So it's wise to learn as much as you can about this. The quote in the left bottom in the white box from the gentleman called Brad Garlinghouse. He's the CEO of a company called Ripple, and they have a crypto called XRP. And Ripple is really, in my opinion, one of the top, if not the top company to keep an eye on right now, because they've been, while they were busy getting sued by the SEC like everyone else for years, they were very busy laying the groundwork for what they were planning to do. And they've got relationships with governments and banks and institutions all around the world. And they're going to be doing a lot of things because they spent the last year buying up a lot of companies that do different things. So they built quite a business that covers a lot of things. And anyhow, there's something to keep an eye on. And he wrote, the shift is clear. Major banks are no longer just looking at stable coins, they're making them a strategic priority. So yeah, he's recognizing the fact that the banking industry is going full speed ahead. And that quote was very recent. What's today, April 6th? So that was just a couple of weeks ago on March 25th. So it's all moving forward, folks. What you're looking at on this next slide is the page, the web page for a crypto event. Now, there's crypto events that go on all year long, all around the world, and have been for years. And they're getting more interesting because they're showing like how everything is changing. In this case, this is one that's coming right up, 9 days from now, in the time of this recording. And excuse me. It's in Paris. It's Paris, France, and it's called Paris Blockchain Week, even though it's only a couple of days, but there's other side events that go on throughout the week, of course, where everyone's schmoozing and the real deals are made. This is the 7th year they do this. And what's interesting here to me, and the reason I put it on here, is the tagline, if you will, to the event, the bridge between TradFi and digital assets. So that's TradFi's traditional finance, like your banks, and digital assets, which would also be called digital finance or DeFi. So that's going to be a major theme at this event. And when I looked at who's attending, it was interesting because the number of actual crypto companies Well, there were all the crypto exchanges are there where you buy and sell like Coinbase and Kraken, and you'll see their commercials more and more in the near future. But well, a number of them were there, but actual crypto companies or companies really directly involved with crypto that have like their own crypto token. I mean, there was a fair amount, but the amount of companies from governments and of course banks and other financial institutions and all of that, it's much bigger percentage of attendees this year than it has been in years past. So that's just showing you again that the level of involvement there, from that sector, from the traditional sector. So this is going on, like I said, shortly. And I always look at these things too to see like which companies are there, are attending these type of events. Because sometimes if they have a cryptocurrency, you'll find that being in an event like anywhere else, I didn't, in my previous life, I was in marketing for a hospital, and we did a lot of these types of trade shows and things. And you get a lot of attention. You get someone might interview you, but people know more, and more people know, the more they get interested and tell their friends. So you always keep an eye on things like this too, because it can give a boost, of course, to certain cryptocurrencies. Sometimes before, sometimes after the event. It's always tricky, like how you might want to play that. We could talk about that some other time. So I mentioned earlier I wanted to show some examples of what's going on between traditional finance and the deregulated, uh, excuse me, DeFi. And what we're seeing is interesting, and I'm going to show you 4 examples here. So on the left side is an advertisement that popped up on my Facebook screen a couple days ago. So I put it in here. Charles Schwab is a big investment company. So people, especially older people, I guess I would say, that have like stocks and bonds and things like that, your traditional financial assets like that. They go through a Charles Schwab or one of these companies and to buy those things. Well, Schwab is advertising now that they're getting into crypto. So they and other entities just like them are now recommending to their clients that they should have some cryptocurrency in their portfolios, which is a new thing. Just from late last year, this started. And some are saying as little as 2%, and others as much as 20% that you should have crypto in there. It's a higher risk than stocks, or has been. And we can talk more about that too later, because that I think is going to probably change once it gets really adopted globally. So I think we'll see less volatility in a couple of years because big financial institutions don't like volatility. They like a nice, even interest rate, like Bernie Madoff's 10% without the criminal part. They want something that's steady and reliable. But that's another story. So anyhow, you see a traditional type of investment company recommending crypto. Then on the right here, this is an actual document I pulled from the SEC, and you have a company, and then go down a bit, you'll see Grayscale Bitensor over here, Trust, TAO, that's Tau is how it's pronounced. And Grayscale is more of a crypto investment company, and they've had a trust fund that you could buy shares of, like you would stocks, and indirectly kind of buy into some crypto. But it really was uh, very rigid. You couldn't do much with it. You couldn't like sell it back and forth and all. So now what they're looking to do is to change that into what's called an ETF, an exchange tradable fund. And that basically is what makes it like a stock. It'll actually be listed like with stocks. So you can buy through a broker or whatever, you can buy crypto, not through a crypto exchange, but just by going through your regular stockbroker. So there are people that maybe don't want to get involved with the whole crypto thing directly. They don't have to learn it, especially people with gray hair like me. They may not want to deal with that, but they heard it's a good thing. So there's already ETFs out there for Bitcoin and Ethereum and XRP and Solana. There's a whole bunch that have already been approved and are out there that people have been buying into. And this too will impact the price eventually down the road. It doesn't impact the price of the cryptocurrency because more people buying into those things, when the price starts, going up, it'll be less of that asset to buy, which is anti-inflationary. The less of a crypto there is, if there's a fixed amount, the more valuable it becomes too. So anyhow, this is a crypto company that is going from just offering shares to an ETF that's going to be more formally available, like a stock. And then on this side, on the left, is a little news thing that came out in January. A couple more updates have come up since. So you have these crypto exchanges where you buy and sell. One of them is called BitGet. And BitGet here is announcing that you'll be able to buy stock futures. That's the riskier part of buying stocks. Buying that with them 24/7. So now you have not only traditional finance offering crypto, but you have crypto exchanges offering traditional finance. So you can see how everything is kind of getting blurry, right? Coming together where, one is offering the other product and the other is offering the first one's product. So things are changing in a very fast and peculiar way. Everything's becoming much more unified. And then one last example on the right here is a cryptocurrency called Aave, AAVE. You can see that. And with that and some others too, you can now, if you buy enough of that with them, or sometimes it's through a third party, but you can take loans out against your crypto. And the reason you would do this is twofold. One, if you're expecting that crypto, you feel it's going to keep doing well, you don't want to sell it. So you'd like to leave it in there so it keeps growing. But also and we'll talk about taxes more in a bit, but anytime you sell your crypto, you're subject to capital gains taxes. And if you lose money, that's to your benefit for taxes. But of course, you're hoping to gain money, and you do have to pay. And the taxes, capital gains taxes, can be really stiff, much like your regular tax rate or very high. So if you take a loan out against it, you don't have to pay that. You don't get taxed on taking out a loan. So you just have to pay some interest and maybe some fees, which is usually considerably less than being subject to the tax hit that you would get. So you're seeing that now. You're seeing loans for money coming from crypto currency companies. So everything is getting rather blended together. Okay, on this slide, this is the cover page of another document. This one came from the World Economic Forum I mentioned earlier, the WEF. It came out a year ago, May of 25, shortly after they had their meeting, which is usually around in January. So this document is a year old. And speaking of asset tokenization, which I talked about briefly earlier, if you look down in the bottom right, that little diagram I threw on there mentions things like fine art, antiques, land, technology, gold, mines, real estate. But what it doesn't include is probably going to be the first thing to get tokenized, which is stocks and bonds, and find those financial assets that you will be able to buy in a much easier and cheaper way. That is the plan, that they're the first thing that's going to be tokenized, but then everything else will. So this came out, like I said, a year ago, and so this is going to be one of the major aspects of this digital economy that's being put into place. Tokenization is just starting to heat up. once the Clarity Act gets passed in the U.S. Congress, that's kind of like the dam holding the water back, and the dam's already showing cracks. So it's just a matter of time before those floodgates open and all kinds of things start happening around the world, and in the U.S., of course, but all around the world. Um, so speaking of the World Economic Forum, what you're looking at here is this is a picture, a photograph taken over in Davos, Switzerland. That's why you see Davos 2026 at the World Economic Forum. So this picture was taken this year, just this past January, about, what's that, 3 months ago. And the United States, and this was a huge event. This was the biggest one ever. They had more, she said, just about every country represented there, people from their governments and banking systems and other financial institutions and tech companies, everything. It was humongous, and it went on for a full week, day and night. And you can imagine what they were talking about. And they put out a lot of videos. You can actually find a lot of videos related to what they were doing. And if you're interested in looking on YouTube. But this was the United States like area. They call it the USA House. That's where the contingent was, and that's part of the hotel or whatever. And the U.S. had its largest contingent ever by far. Several hundred people. For President Trump brought several hundred people with him. And these are the companies that made up this contingent in addition to the government people we sent over, which is very interesting because this was not some random bunch of, friends or people that may have paid money to go or something like that. Um, there's a common denominator here in that all of the companies I circled, and actually I could have circled two more, all of the companies I circled have some direct connection to crypto, blockchain technology, or what have you. Some of them directly are. There's two on here, Ripple to the right where you see Ripple payments, and the white is what I typed in the white letters. And then toward the bottom, left center, you see Hedera, which Hedera's got a huge board of about 25, 30 people from all the major companies in the world on their board. Even next to Hedera, you see MasterCard really small there. It's hard to read, but that's their symbol. They've already got a partnership with Ripple regarding stable coins. So a lot of these companies start working together like that. But what you're looking here is almost like a big corporation itself with all of these different parts of the corporation all kind of like working together in some way. So it's really, really interesting in terms of who went along here. And I didn't circle Microsoft. I don't know why I didn't, but I guess I was tired of doing red circles. But Microsoft obviously is very involved with technologies, and they even have a crypto or two with some of their projects that are going on. And then Pfizer, everybody's favorite company. Pfizer has a relationship with particular crypto in an up and coming sector called DeSci, DESCI, which is deregulated science and healthcare and pharmaceuticals. So that one is late developing because everything else is moving faster and healthcare always moves very slow. But Pfizer donated several $1 million to a project associated with a particular crypto a few years ago as a seed money investment into their project. So everybody's got their fingers in here. But this was just interesting, like I said, that there is an aspect of connectivity to all of these, almost like a real team of working together in different ways. Of course, we'll never know exactly who's working with who, but very interesting nonetheless. And this took place in January, like I said, of this year. And I mentioned earlier, Larry Fink was the co-chair of the trustees of the World Economic Forum. He replaced a guy that you might have heard of named Klaus Schwab. Now that should, ring a bell with some. Klaus Schwab is famous for his statement that I think the quote or alleged quote was roughly, "You will own nothing and you will like it." I don't know if you heard that one, but he replaced that guy who's just getting older and retired. So, as I said, Larry is a very influential and powerful man. And as you see in the background of these people, there's a lot of people from the Middle East because there's a lot of people wearing the traditional Arab garb there amidst the. There are definitely places on the planet that are more excited and involved with all of this. And in the Middle East, that would be especially Dubai and the UAE, the United Arab Emirates. They're pretty much the center of activity for the Middle East. Saudi Arabia would probably be behind them, probably Israel behind them, more or less. But it was quite an event. I put this on here because Larry's been doing a lot of interviews and saying a lot of things, and picked up on three interesting quotes I wanted to share. One is already mentioned, where he says everything will be tokenized. And so who knows, you'll be able to go out and buy a car one of these days, and once you do agree to a price, you'll just go online and buy the token, you'll own the car or someone's house. Another interesting thing was in an interview I was watching with him, and they were talking specifically in this part of the interview regarding security of this whole digital system, in order to make it safe against like hackers and other things like that. And Larry came out and said that everyone will have their own number, a personal number to use the system, which I found kind of interesting. I'll use that word. And then, along that line, you might say, I was watching him at Davos, and he was talking. And in the middle of a while he was talking, he did what you might call Freudian slip. And he's in the middle of the discussion with someone. He said, well, if there was only one blockchain, because I use the term blockchain, but there's lots of blockchains. It's not like there's one thing. There's lots of big blockchains and small ones. But he said, if there was only one blockchain, started his next sentence, stopped, and then went back and said, oh, not that there's going to be that. Like he, caught himself having said that and then went back to say, oh, that wouldn't really be the case, which that was the red flag there for me. It's like, oh, Larry, if you just kept quiet, people like myself probably would not have even noticed, but you went back and pointed it out. So I found that very interesting in terms of, what does this guy know? What are in the plans? What are in the works? And everything is heading clearly to a singular unified system. If you read all of the literature and you watch all of the conferences and speeches, and I've been doing that for a while, that's all they're talking about, is bringing the whole planet together in one happy system to avoid all of the, currency issues, fluctuations between different currencies and other problems they have. And this has been in the works for a long time. I was reading documents from the IMF, the International Monetary Fund, back in the 80s when I was starting to look at this stuff. And they were talking about doing all this, but they just didn't have the technology. Now they do. And they didn't have that strong desire yet from all around the world. Now they do. So there's really nothing stopping it now from moving toward that. I mentioned earlier that there was something in Congress going on right now called the Clarity Act. And there's not a lot of, well, there might be, but there's not a lot of public information, not a lot out yet, with all the details that you can imagine. This is a huge deal. We're talking about changing the way the whole financial system works in the US and around the world. So this is no small matter. And as I said, there's a lot of fighting going on between the banks and the crypto companies in terms of who can do what and regulations and all. The quotes on the screen look boring and vague, and that's pretty much what you get when you try to look up information about this. That there is more details, but it's still, the main point is that once this does get passed, it is kind of the traffic light going from red to green. And hopefully they'll get that all worked out soon so that this won't continue to get held up, because the longer it gets held up, in terms of the United States, other countries are just still moving forward and developing things, and you just might see more and more, especially if it doesn't go through like right now and it's going to really be delayed. You might see more and more people that are working in this area um, change horses, leave the US and go work somewhere else, which is not necessarily a good thing. But nonetheless, that's what's in the news right now. It's also called the Market Structure Bill. So if you hear this in the news, and you will more and more probably in the weeks ahead, this is a big deal. It really is. One other thing before we get to the more fun stuff is like one of the problems I mentioned earlier that some of the banks are actually creating their own stable coins and all, which is great. However, if you're JP Morgan and I'm Goldman Sachs, and it's like, well, whose stable coin are we going to use? Who's going to be like running that show? Well, one doesn't want to use the other's stable coin and back and forth. So that creates an issue. And there's other technical issues too. So really, um, what is needed is kind of a bridge between these things. So they do relate to each other right now, but there's limitations on these things and often involving like third parties. So they need a neutral bridge. And that's the kind of technology that's being developed right now. And that's kind of a strong hint for everyone that wherever you see there's a problem, some type of friction, they have to come up with a solution. And whoever comes up with that solution, well, more than likely that entity, that company, or that project is going to do well, which means the associated, if they have one, the associated cryptocurrency to that company providing solution is also going to do well. So that's something to keep in mind if you do research on these type of things, is look for what cryptocurrencies have utility. That's the term that's used, and that it's solving a problem. If it's solving a problem, it's going to have value. That's really what it comes down to. Okay, so we're going to pause here for a second. Well, just a brief second. And we're going to talk next about cryptos themselves. So we'll get into the fun stuff that people probably be more interested in. But all of that background information is important to understand. There's some things, especially like we just mentioned, in terms of, recognizing, what's going on and what the problems are and who can solve the problems, and do they have a cryptocurrency? That kind of thing, that kind of thinking is important. That first slide I showed you with all of those crypto YouTubers, just, talking about whatever they feel like talking about that day and telling you how great some coin is because they think it's cool or whatever rationale they have. It's all very short-term thinking, and 90% of the time they're wrong, but it doesn't matter because, like I did at the beginning, they tell you they're not a financial advisor and you can't sue them for anything they say that's dumb or misleading. They can say whatever they want legally. So it's best to learn these fundamentals like we were talking about in the first part of this presentation. And we'll move on to actual cryptocurrencies and things involved right in a moment here. Okay, so usually if you bring up the topic of cryptocurrency, people will think, oh, you mean Bitcoin? It's almost been synonymous. And it was synonymous for a while because Bitcoin started first and was the only act in town for years. And so the Bitcoin really, really does dominate. Of all the value in the crypto space, of all the different crypto coins, Bitcoin probably on average is about 60% of all crypto value is in Bitcoin. So it's the big daddy above and beyond, not even close to any other in terms of how long it's been around and how big it is. So the price of the price of Bitcoin fluctuates between like 60,000 and 120,000 or something like that. It hit like 120 something thousand in the not too long ago, and it's dipped down again. As I said, these things go up and down considerably, so you do need a little bit more nerves of steel, and don't put your whole life savings into it. Unless you just really believe that this is it and the dollar is going to lose all its value, and there's some truth to that, some truth. But anyhow, you have Bitcoin, and then you have countless other coins. And when I say countless, it's millions. And the reason is so many is because anyone can make a token. I can go online tonight and make my own token and name it after my cute little dog. And it doesn't mean it's going to go anywhere or do anything, but there are a lot of useless tokens. A lot of them are just people doing like I just said, just creating something, tell their friends I've got a token. And you probably won't find a lot of these, especially if you stick to the legitimate crypto exchanges like Coinbase and Kraken and KuCoin and these other ones, Binance. You stick to the legitimate ones, they only offer cryptos that have been around a while and prove themselves to be legitimate, so there's no scams. So you're very safe with coins that are on those exchanges. So I do recommend you stay with those, and we'll talk about that in a minute. But there are hundreds of good ones out there, even thousands of okay ones, and then after that you get into the millions of garbage coins, or S coins as they're called in the industry. But I won't use the S word here either. So that's what you have here is you have Bitcoin dominating the scene, and these other coins, which are, you'll hear the term alt coins, ALT, which, as you might guess, stands for alternative. So Bitcoin's so big, it's its own thing. And it's, like I said, 60% of the market, probably on average, give or take, is Bitcoin. It goes up and down. And when the altcoins start to do really well, which is they're in their own cycle, or they have been so far, more or less in their own cycle, when they start to do better, it is a nickname for it called altcoin season because they're dominating the market. Not more than Bitcoin, but more than usual. And that's like altcoins are doing well. So it's altcoin season, everybody. Nobody posted on the wall or the trees or anything. It just is. You just have to know. And that's what people that and altcoins, because that's one thing about crypto is the coins that have been around longer and have like bigger value, costs more, per coin. And you don't have to buy a coin. You can buy, it's all fractionalized. So like Bitcoin can be worth $100,000, but you can buy $10 worth of Bitcoin. So, and if Bitcoin goes up 10%, your $10 becomes $11. So, but anyhow, these altcoins are smaller in what's called market cap, which is simply how many coins are out there in circulation times the price. And smaller the coin, smaller the market cap, the more volatile. So that's where people can make more money than like a Bitcoin. Bitcoin's more like slow and steady, as our other big coins are more slow and steady. So you might think more long-term investment, and smaller, medium-sized ones are a little more likely, a little more risky. Not risky to go out of business, but just to go up and down more. But that's, again, in the right circumstances, that can be where the money is to be made. And we'll talk about that more in a bit too, because I'll give you a good example of that. So here's a little bit first. We'll get into some general things about crypto trading. I mentioned these crypto exchanges, these crypto platforms where you can buy different cryptocurrencies, the ones that they carry. So even though, as I said, there's so many cryptocurrencies, if you go on one like Coinbase, which is the biggest one in the United States and one of the bigger ones in the world, Coinbase only offers like I think about 400 or so coins, which is still a lot to pick from, obviously. But they have their own reputation, of course, to guard. So they're not going to put junk coins on there. So Coinbase offers all legitimate products, as do the others that are on what is called centralized exchanges. So this is an aspect of central control, centralized exchanges. So then you have decentralized exchanges, which are kind of like the Wild West. And that's where you get a lot of the scams and bad things, but that's also where if you ever hear a story of somebody making $1 million in crypto and all they invested was like $100 or something, I might be exaggerating, but it's like lottery tickets, And I would recommend just staying away from decentralized exchanges. So those logos in the top left are just those 4 images. You see the 4 circles. Those are just images for some of these different. The one on the left is Binance, and the one that looks like a KC is KuCoin, and then the funny one, it looks like a I don't know, octopus or something there. Anyway, that's Kraken, and then Coinbase with the big C. So those are your legitimate exchanges. I would say, and I'm not paid by anybody here, that the for beginners, the reputation is Coinbase, and it's the biggest. Coinbase is the easiest for beginners. I would recommend that. Nothing wrong with the others, of course, at all, but just for beginners, especially Coinbase. The only downside is that the fees are a tiny bit more expensive, and also with Coinbase, here's a way to avoid part of that. If you go right on Coinbase and buy and sell on the main page, you get hit with a higher fee than if you shift as a button to go, you can click to go over to the advanced mode. And it's a little more complicated, but if I can figure it out, you can, really. So it's not too bad. And you can download videos or just Google on things and get all the info you need and how it works. And then just, when you start out, just keep it slow, keep it low, $5 or so here and there till you're comfortable with how it all works. There's more features in the advanced mode, and it's cheaper fees. And of course, the other thing is if you do a lot of trading, they lower your fees. They like keep you around and happy. But I would recommend everybody starting out Coinbase and learn the advanced mode. That's probably the best path for a starter. Down the bottom left, you see CEX, DEX. It's actually pronounced sex and dex. So, but when you're saying it versus typing it, it can confuse people. So sexes and dexes, and sexes like Coinbase have all these coins that are like connected to it. That's the diagram kind of showing you that. And then a dex, well, like I said, it's when they got their little guy flying through the air. Yeah, you're flying by the seat of your pants. Maybe that's what it's saying. And there are legitimate coins on dexes. There really are very legitimate ones. You just have to like go do your research first, whereas you're safer to not have to really do that using like a Coinbase or something. So anyhow, dexes are like I said, the Wild West. I wouldn't put too much in there. Maybe if you want to take this something you read about that sounds legitimate, and maybe it's something that might, really do well in the future, like that I mentioned earlier, like DESCI, DeSci. All right, so there's some of these DeSci coins right now are on DEXs. They might move over to CEX, the sexes, but for now they're on DEXs, most of them. It doesn't mean they're bad. It's just they're starting out. That's where they are. So, but maybe you want to put $10 in one of those or something, and who knows, it might really take off or something one day. So anyhow, that's not giving real advice here, not financial advice. This is just thoughts and ideas again. As I mentioned earlier up in the top right, there's fees anytime you make a trade, buy or sell, or swap. In some cases, you can actually swap. I don't recommend swapping. That's usually expensive. It's often better to sell and then buy the other. In some cases, you can't swap, but there are trading fees, and they're tiny. They're some fraction of 1%, generally speaking, especially on the centralized exchanges. But if you go out on one of those dexes, and like Coinbase has a product called Coinbase Wallet, and that gives you access to a lot of the dexes, and those fees can be a lot higher. So you're paying for the risk and the right to go lose all your money. No, to buy these other things. So be aware of fees, and research up front like what it's going to cost you. And of course, I did mention wallets. Now, when you buy crypto on something like Coinbase, it's on their exchange and it's safe there. I mean, it's reasonably, well, more than reasonably, it's very safe there. But there's always those extreme possibilities in life that they go out of business one day, highly unlikely, or they get hacked and they get hacked into people's accounts, which is again is highly, highly unlikely. But if you want to transfer crypto you've bought into a wallet, you can have your own wallet, which is safer with your own passwords and all that stuff. That's something you can do. You should research that carefully. There's two kinds of wallets. There's kinds that are online, which are somewhat, I would say, pretty good and safe, but they are online. But there's also what's called cold storage wallets, which is an actual physical device you buy and you use that to your cryptos is on the blockchain, but the wallet gives you access. Okay, that's how it works. It's not actually in the device, but the wallet gives you access. So a cold storage wallet is offline. So no, that's not hackable because that device is probably sitting in the corner of your house somewhere. But the thing with wallets, when you set them up, there's usually a seed phrase, which is a whole bunch of words, like a password, but it's a whole bunch of words, not just letters and characters, random words. And that's not stored anywhere except where you write it down. And that's the big thing. You need to write it down in at least 3 places. Literally write it. Don't type it in your phone because phones can get hacked and nothing like that. Okay. Because wallet numbers, like a checking account number, that's public information. It doesn't know it's you, but the wallet numbers are just out there. So you wouldn't want somebody to have access to your seed phrase ever, because once they have that, they have access to your money and it's gone. So you need to write it down, keep it in some places, at least one outside of your house in case, God forbid, your house burns down. And you might need those one day if you have to, like, something goes wrong and you need to re-download a wallet if you're online, or if there was some kind of glitch or something that you needed to reload your wallet back in or whatever. You'll need the seed phrase. So I'd recommend at least 3 copies. Hide one in the garage or the basement really good, inconspicuously. Keep one in your bedroom in a bureau, and give one to your trusted relative, mom, dad, child, brother, whatever, someone you can really trust. And, on a plain piece of paper, and just have them stick it on page 73 of their favorite book or something. So anyway, just something to know. And you should look into all of these things more, of course, before you get involved. I'm just giving you some very general info. Oh, yes, here we go. Everyone's favorite topic, taxes. And I don't mean that state north of Mexico. I said taxes. And there are some things you should know, and that is crypto that is held for over a year gets taxed less than crypto that is held for less than a year. You don't get taxed unless you buy or sell. So if you transfer it into your wallet, that's fine. There's no tax on just transferring it back and forth between wallets. But as soon as you sell something or buy something, it's a taxable event, and it's automatically recorded, and will be as of this year. Now it's really all changed, and the IRS has caught up to things. This was the last year that went by to get away with anything. Now they are going to have they'll know what every wallet owes. So anyhow, buying and selling are taxable events. Harvesting losses, there's an interesting thing here. I wouldn't call it a loophole. It's perfectly legal. You can't do this with stocks. There's a thing called the wash rule, where if you losing money on a stock and you want to sell it and like claim the loss on your taxes, you can't just rebuy the stock till 30 days go by. However, with crypto, that's not the case. So if I've lost, I had a crypto that lost 50%, oh my goodness, it's terrible. I can sell that crypto at the low price it's at, the loss, and 5 minutes later, I can buy it again. So I lock in that loss for taxes, and I rebuy it at a new price. So that's something you can do with crypto, which is very handy. You might actually, if you have a really bad year, you can claim up to 3,000 a year in losses against your regular taxes. But also, if you have, let's say you lost $10,000, and you can only claim 3,000, you can take that other 7 and still claim it 3,000 per year until you use it all up. Also, if you do have a large amount like that, and then let's say the next year you have a really good year in crypto, make a lot of money, and you want to sell some of it, you can offset the capital gains tax on what you sell using that leftover loss from before. So don't sell, borrow against it. We talked about that. Some of this is a little risky still right now, because you have to put in a large amount. You can only borrow sometimes at 30-40% of what you put in. Because if the price of your crypto crashes that you use for collateral, it's called a margin call, and you can lose your money, like as in all your money. Not likely to happen. And the safeguards, you can have alerts sent to you if it's getting close, and you can put a little bit more money in to avoid any problems like that. But all of that is changing. There's more and more technology evolving that is going to minimize the need for big collateral, and minimize that kind of risk and everything. So that's something to keep an eye on. It's still a developing area. You can also donate or give a gift to someone without it being a taxable event, but that could vary from state taxes. It could definitely vary. I'm not sure if the U.S. law could change on that. So that one I would just be careful of. But the big thing is selling and buying is a taxable event, and taking a loan out against it is not. So anyhow, that's that. And as I said, moving it back and forth is fine between Coinbase, saying let's say you have a cold storage wallet or an electronic wallet online, you can move it back and forth. That is not taxable. Again, look up more information on this. I'm not an IRS person. I'm not a financial person. This is just basic info that I've discovered. Okay, now we're going to get into some of the real fun stuff. I mentioned earlier that cryptocurrencies is all different kinds. They fall into what you would call sectors. I also mentioned there's not just one blockchain out there. That's just a term that's used, the blockchain. It's kind of a generic term, but there's lots of blockchains, and the bigger ones that are established by, initially established by large companies that start a blockchain are called layer ones or L1s. And then other companies will come along and say, well, there's a lot of risk there to start my own L1, and there's things that cost money. We'll tag on to an L1, and they our smaller blockchain, and they'll use some of the resources from the larger one. And those are called layer twos or L2s. So that's what those are. And some of this cryptos out there representing these. So there'll be a crypto that is basically a crypto for an L1, like that, like a Bitcoin or an Ethereum. Bigger ones like that, especially. There's a bunch of L1s, and then you'll see some of these have projects on them that have their own chains, and those are L2s. Okay. And we mentioned stable coins. These are mostly right now just assets that are, keep their value stable. So $1 stable coin is worth $1 today and tomorrow and the next day, used to move money back and forth. So this is not something you would use to invest in. But then you get into all kinds of categories, sectors that are legitimately good ones to look into. And if you're a long-term thinker and understand that a lot of this stuff is right in the middle of being developed, so you're talking about something called infrastructure, how all this new financial system is going to work. And so there's different aspects to this infrastructure of what's being built. But tokens, but you'll hear coins and tokens. A coin is usually like the top level thing a company puts out as their coin. And then if they put out other things, that's called like more of these other things beneath that, it's called tokens. But they're very synonymous. Anyhow, infrastructure, tokens, anything related to that is a good long-term thinking, I would say. Some even more than others that you might not have to wait a long time to see good impacts, because this stuff's moving fast. So infrastructure you should consider. Payments is part of infrastructure, but it's kind of a specific part of it. So payments between high-level institutions and banks and cross-border payments, that's one type of thing. And then that definitely is coming, I shouldn't say probably, that's definitely like the first type of thing being developed through the institutions. And the public, us, you and me, the average Jane and Joe, are coming on board later, and that'll be like smaller level payments and micro payments and payments for your paycheck and all of that. So payments is part of that. Of course, there's AI. AI touches everything. A lot of these other sectors have AI aspects to them, but there are some tokens that are more directly related to the artificial intelligence itself. Closely related to AI is something called robotics. Robotics has been around forever. There's even like competitions for high school kids for robotics. It's been around for many years, but now AI and robotics are closely merging, which is interesting. And so robotics is definitely one of those categories, those sectors that could be very good in the near future. You will find a lot of those early robotics coins on the DEXs I mentioned, a little riskier. Not that they're that risky, but a lot of them are new and could go under, new projects. But again, if you're in early on a new project, you never know how well it could do. Closely related to that is IoT, which is Internet of Things, which is your things and connecting them to the internet. So allowing these companies to use perhaps like your storage space or computing power and things like that. Maybe not. Sometimes it could be a person, but businesses especially that have things like that they more or less lease out, that stuff to be used. So there's tokens associated with that whole sector. And then we talked about DeFi, which is your financial tokens, which we'll talk about more in a minute. DeFi is certainly one of the first things I think is going to, be a very interesting sector to look at, especially when the Clarity Act gets passed, because the financial institutions are all, chomping at the bit. DePIN is a deregulated physical infrastructure, which is it's not the same as IoT. It's a little different. I'm just going to move down the list, let you look up some of these because there's a lot here. DeFi I mentioned. science and healthcare. RWA is real world assets. That's closely related to the whole tokenization thing we were talking about earlier. If it's something out there in the real world, it's an asset and you can buy it, it's going to get tokenized. So RWA. And that's another one that's probably near future. We'll talk more about timing too in a minute. Then gaming is interesting. Has always been, gaming is a huge market, period, aside from crypto. But there's companies that are involved with crypto and gaming and online gaming, and AI is coming into gaming more. So that's something that's to keep an eye on. That can be very hit and miss. That can be very seasonal. Traditionally, actually, gaming tokens have done well like between September, October, November, like leading into the holidays. And then you want to get out early December or even earlier because everyone gets out. They made their money and they sell. And as soon as everyone starts selling, the price goes down. So you could go to bed all happy. And overnight, everybody decided to sell off their profits before, the end of the year for taxes, or just because they want to take the profits. And the price of your gaming token crashes down to next to nothing. So that one's really volatile. It's something to just keep an eye on. And there's different ways to keep an eye on it, depending on how much time you have and how much you want to be involved in all of this. And then meme coins. A meme coin, I mentioned earlier about anyone can make a coin and put their doggy's face on it. There are meme coins that have been around for a while. Some have done really well. I avoid meme coins. They are more like gambling, because a lot of them don't have any utility, any purpose. Very few do. And they're mostly social kind of things. Though you never know, there's a coin called Dogecoin that really did incredible a couple of years back because Elon Musk was, kind of involved. And actually, that department or whatever it was called Doge that he was involved with later. So anyhow, I would just kind of keep away from meme coins. I mean, if you want to try one or two at a low amount and hope it, catches fire one day and then quickly sell it, okay. But generally, and of course, scam coins is not a real sector, but just something to be aware of. The other way I personally look at crypto too, in terms of what I might put money into, would be, is this something like gaming? Is this something that has a short window where I really have to keep an eye on it? Short-term things. And then there are things that might be more seasonal, like 3 to 6 months. And this doesn't mean, I'm definitely going to sell it at 3 months or 6 months. It's just kind of like a general time frame. And if it's doing well, then you keep hanging on to it longer than this. So medium term, I'm almost thinking something like with the Clarity Act. If it does get passed, let's just say it got passed in in the next month or two, and then for the next few months after that, a few things might be really hot. So that's that kind of thinking. The more long term is in crypto is that long term in crypto is different than long term in other things. But long term in crypto, like 6 to 12 months to a year, I'm saying, okay, here's a token that I might put some money in it now and watch it, and if it looks like it might be about to do better, and that's research and everything else, but then I might add more in a month or 3 months or something like that. And then very long term, also called HODL, hold on for dear life. Those are ones you really believe on. Those would be like your infrastructure tokens that you really research might show you that this is going to be at the heart of things for the next for quite a while. It's going to be a slow and steady but a good long-term investment. So these are just general ideas to keep in mind. So you have sectors, you have amount of time that you might hold on to it, and then there's all kinds of things regarding coins. On the right side I put under fundamentals. I mentioned market cap. That's the value of the coin, how much it is times how many tokens are out there in the circulating supply. Some cryptos have a limited amount of coins, and so eventually there won't be any more to buy. Bitcoin is one. It has 21 billion, I think it started with. And there are others that have limited amounts like that, and others don't. And the thing with that is if more coins are released, like they want to make more coins available to people to buy, that's considered inflationary. It's like anything else. If there's a lot of something, it's not worth as much as something that there's very little of. So, and that's not usually not a huge deal, but something to keep aware of. There's what's called token unlocks sometimes for different coins, and so that's a thing to check periodically to see if there's like a huge token unlock from a company where they're going to release a whole bunch. Um, and in crypto, as I mentioned, is just volatile. So we mentioned that already, that smaller ones tend to be more volatile than bigger ones. Market cycles. So generally, if you follow the stock market or anything like that, there are times where people are more nervous about money. And so they don't want to take any chances. So they keep it in their bank accounts or buy gold, something steady, but not making a lot of money off of it. And then that's called risk off. So you're not taking the risk, the risk is off. And then a risk on means, oh, you know what? I got some extra money in my pocket. Things aren't too bad. I think I'll buy some stocks or some crypto or something. So that's market cycle, something to be aware of. Portfolio diversity. So we've covered a lot of different things here, sectors and market caps and how long you want to hold things and all of this stuff. And generally, that's always been a way of thinking with investment companies that you want they've always said you want the majority of your money in safer things and then a small like 80-20 or something, keep 20% in the riskier things. That's kind of a set rule, but I don't like set rules because, it's the markets change. So right now, we'll get to this in a minute. It looks like 2026 could be an extremely risk on, like, hey, what's that expression? Strike when the iron is hot. This could be a big, not only a big chance, but maybe one of the last big chances, I think, that we'll have that kind of volatility where you could actually, if you're in the right tokens, could actually do well, very well, and possibly. Again, who knows? But, it's all probability, and the probability for this year with the legislation, when it passes, and this administration and then the whole world lining up to do stuff. We've never had this before. We've never had this scenario with crypto ever. Not it's like comparing a sand pebble to all the beaches in the world. We've never had all the governments and all the financial sectors, everything wanting this to happen. So who knows? No one knows for sure what's going to happen when the floodgates open. But I don't think we'll ever see anything like what the next year will bring, or 6 months to a year, maybe. And then you want to keep your eye on the whole thing from that Jensen Huang quote about getting as many facts and information as you can, and understanding both your own emotional self. So I always would recommend to write things down or put them in your phone, or some general guidelines, like say for instance, if this token gets to this amount, I'm going to sell some because I don't want to risk it like going down and losing that chance. Or if it drops so low, I'm going to buy a little, give yourself some guidelines ahead of time and stick to them, because when you get in the heat of anything crazy happening, good or bad, your emotions kick in and you make bad decisions. So, give yourself some strong guidelines, write them down if you have to, and stick to them. And understand all these different, which coins have good, usage that might do well, like we talked about, that they're solving a problem, they have a good narrative. Dollar cost averaging. So here's the thing. Let's say you have $100 and you want to put it in a certain coin. And you're like, oh, do I put it in now? Do I wait? It's going up, it's going down. Well, if you think it might be going up, but you're not sure, and you got $100, well, put $25 in and then wait. And if it looks like it's starting to creep up, I'll put another 25 in. You don't have to put it all in at once. That's what DCA is, dollar cost averaging. Same with selling. Sell a little more if you feel it's time. So you don't have to do it all in big chunks. It's less risky. You might not hit the big home run, but you also won't get thrown out of the ballpark either. So that's a good strategy. That's very recommended by a lot of people. And then you always have that aspect of, do I take some profit off my coin? Let's say you're looking at that diagram in the top right, you see that it's going up there, that's just a generic diagram. But your coin's starting to go up a bit. You think, well, it might drop down. It might even drop down a lot. For whatever reason, do you take some profit? Do you sell 10%, 20%, 30%? Do you sell something? Or do you just, let it keep going up? Because this is cumulative. It's like money in the bank that earns cumulative interest, right? So the more you let it ride, if it earns 10% and you left more money in, then you're making 10% the next day, let's say, whatever, on a bigger amount of money. So you do better than if you had taken the profit. On the other hand, if it drops down, you're going to wish you had taken some profit. So this is something, again, the more you learn, the more you try things out, again, using very small amounts till you're more comfortable, the better. So as I said earlier, come back to these slides and look into these terms online, Google them, research them, and see what they mean. So, excuse me a sec. One of the things with crypto, it's not just necessarily randomly volatile. There are things that can spike interest, if you will, and this is a slide. I'll have to go back and see if we did. There are things that can spike value in crypto, and you can track these things, some of these things, through online, newsletters put out, just industry crypto newsletters. Some of these companies have their own newsletters up on the X platform, formerly Twitter, etc. There's different ways to do your homework. And starting in the top left, I got to explain these images. These are just random images I took, but starting in the top left, hold on a second. There are partnerships that go on. I mentioned MasterCard and Ripple earlier. There's different partnerships, not only between traditional companies and crypto companies, but between crypto companies too. Like the same company, Ripple, has a crypto company called Flare that's doing something for the XRP token, Ripple's token, that enables something for it to do a different technology. So the emerging technologies that solves another problem or creates another opportunity. So keeping an eye out for those type of things is important. Also, as I mentioned earlier, there are conferences that go on around the world. Some are general to crypto, like the one in this image, blockchain conference. Some might be specific to like finance. So the companies that are involved with finance will probably be attending. And there are some that companies or tokens that put on there, like there's a Bitcoin conference every year. There's Ethereum is another big coin, the second biggest one. They have their own conference. It's in fact, it's just finished last week. This was last week. So there are different conferences that are general or specific. And then you have things that might impact certain coins specifically. And that's good if you can be on top of this and hear about it, obviously, ahead of time. I got a picture of a fork there because there's a reason for that. So one example is like technology in a coin, a company might decide to really change it up a lot, so much so that it's like almost like a whole new product. And they call that a fork or a hard fork. And usually when that happens, that can be like a big news item and generate kind of a long-term betterment for the coin. It might not make any difference the next day, but the announcement could. The announcement, sometimes the narrative sells a bit too, but it's long-term good new technology, so hard for. So there are things that do happen to, these are all technology products, right? These cryptocurrencies, programmable, and all the different things. So if you're aware of something that's coming up or just happened, that could be a good thing for particular crypto. Another thing too is some of these coins are on cycles. They have people who, without getting into this too much, you can look into it more, but like Bitcoin has mining, it's called, which has to do with the creation or the release of new coins out into the market. And sometimes they'll have things called a halving, a halving event, like cutting something in half, a halving event. What this results in, and this usually happens every 4 years. I mentioned earlier, like 4-year cycles. This results in less money going to some of the people that are, mining and doing these other things. So they have to work a little harder, and that money goes more toward the coin, the token, and us, the buyers. So having events are always something to keep an eye out for, because that's again, the announcement itself could make a difference, as well as the long-term effect on the coin. These are, like, again, all things you can study and read up on. And again, feel free to submit any questions to me or in the group, in our Facebook group. And then lastly, legislation. Around the world, there's legislation being passed. That's always generally almost always a good thing for crypto. Although sometimes it can have a negative response, like in Europe. Europe's really a lot of regulation, sometimes too much so for the likes of, people that are in crypto. We did, it's good for crypto because it's needed to, clear the way, but it's also, if it's overly regulated, especially in the areas of over in Europe, and especially in England, issues have come up recently with like digital IDs and connecting that to crypto, and limitations on and things like that, how much crypto you can have in your bank account, so weird stuff. So, being aware of that, that's not so much an issue in the United States as it is elsewhere, but legislation can be a catalyst as well too. Okay, so another thing that can impact, uh, be a catalyst for crypto, and this ties into that whole risk on, risk off thing. So if there's a lot of money floating around and available to spend on stuff, things like stocks benefit, but things like crypto really benefit. It's kind of a trickle down. You go from savings accounts and gold are safe, stocks are riskier, crypto's riskier, kind of in that order. But that doesn't mean there's like less opportunity because it's at the end of the chain. It means there's actually more opportunity for, more substantial gains. So when governments, the expression is turn on the money printer. When governments start printing money for some reason, that money comes into the markets eventually. So, they might be doing stuff with it, but eventually that money ends up in somebody's pocket and they want to invest it to make more. So when you see a lot of the money supply increasing for some reason, globally or in the US, either or, that has an impact. And when the money might get tighten up, taken out of the system, that means there's less money going into things like crypto, and it won't do as well. You'll hear about the Federal Reserve and the interest rate, and that's come up a lot in the last year or so. And President Trump wanting rates to get cut because when the rates get cut, people can, more loan money is available, so more money comes into the system, and that would help crypto. Higher rates are bad, same thing. Another thing that is on the agenda, there's a lot of politics here. I mean, the current administration is at this point in time, is popularity wise, is down considerably with everything going, a lot of things going on. So you got to figure with the midterm elections coming up, they're going to pull out all stops to put more money in people's pockets, or a chicken in every pot, as it was said many years ago. So you're probably going to see a lot of things happening to increase the money flow, the money supply. Another one of which, with the interest rate thing, the U.S. has to refinance debt soon, and you don't want to refinance debt like on a house at a higher rate. So another reason they want rates to come down, although that's not really the business of the Federal Reserve. So I don't know how they're going to manage that, but more money printing is coming. The Federal Reserve, there's another thing called quantitative easing, and that's technically not being done right now, but the Federal Reserve is doing other things similar to that to bring more money into the system. And of course, sadly but true, war. When there's a war going on, the government's going to need more money to pay for everything from, what's going on now and after the war ends, and fixing things, and, repairing things, and replenishing things. And it's going to need money. So it's going to do what governments do. And it's going to start printing money, which is very inflationary, of course. And then they hope to, find ways to avoid inflation going out of control, one problem at a time, right? But that's the likelihood of more money coming into the system is fairly high. That's another catalyst for the year coming up, something to keep an eye on. So there's different reasons that we could see more money printing going on, and it's both U.S. wise as well as globally too. Other countries have been increasing money supplies as well too. So let's get away from that for a moment and let's look at a little strategic thing in terms of some things to think about if you are considering investing in crypto this year, which, as I said, never overdo it. But I do believe that the next 6 months, 9 months, maybe 12 months or so will, from what I can see, this is just an opinion, uh, will be the biggest opportunity ever. And I think the door on that's going to more or less close once all the financial institutions have their act together. They don't want things to jump up and down in price like wildly. They want nice steady gains. So there's going to be some type of limitations, I think, coming up. That's just my opinion. So what you're looking at here is kind of a strategy based around this Clarity Act passing. Okay, so the Clarity Act that will give the green light in terms of everything will be put into law. So these financial institutions, they can't do things unless they're completely legal, and things are in a gray area with a lot of this stuff right now. So it's all on hold. Once it's in law, that's the green light. They can go forward and start doing all kinds of things and offering products to customers and crypto products and developing their own coins. All this stuff will happen. And the whole world's waiting on the US. We are still the big fish in the pond. And although they may be ahead of the US in a lot of ways that they developed, they can't really go forward until we get our laws in place. Europe already has their crypto laws in place. I forget, MICA, MICA, I forget what it stands for, but that's the acronym. You can look up MICA. That's already in place with, and there's some crypto coins that are very well like aligned with that. They're smart enough to do that. But anyhow, what happens if the Clarity Act passes? What do I think the flow will be in terms of not specific coins necessarily, but those sectors we talked about? Like once that's passed and it's legal, the financial institutions, what have they been talking about and scheming, and what are they waiting to first do? And from what most of the indicators are, the category and anything involved with finance itself, right? Because the banks are going to be, developing these new technologies and merging with crypto. So a lot of things are related to DeFi. DeFi itself, I think, will be the sector, the general sector, to get the first blessing, so to speak. Not that others can't. It's all probabilities again. So I think that of all the sectors and which ones might get some benefit first from the Clarity Act being finally definitely passed, I think that DeFi, decentralized finance, is the one that will probably see the first inflow of money. And I put on the left there in the top left, some DeFi tokens. I'm not saying to buy these. I'm just saying these are some that I'm aware of that I've looked at. They're legitimate, and any of these could be good. If you want to talk more in detail about them at some point, again, you can just send me a note or whatever. But there's different ones, and they're on different chains. So I've kind of some are on the Ethereum chain, some are on a chain called Solana chain, and that doesn't mean the same thing. Some of these are really like part of the chain, highly dependent on it. Others just are using the chain. So there's differences there too. Without getting into all the technicals, this is like almost like a top 10 or so of ones that I think are decent, are good. So these would be some to do some homework on. Don't just blindly buy something because you saw some idiot like me putting it into a slide presentation. So yeah, those are all decent. And then what happens is once the money gets into a sector and it gets a little saturated, and it kind of calms down. Well, everyone says, well, where else could my money do well and like do better? Like what's the next hot thing, next market? And there we're looking at a few things more that would, and I wrote Q2 for DeFi, meaning like pretty like assuming it happened today or next week, the Clarity Act passed. So this would be like in pretty fast. Like you'd want to get right on that. And then looking more Q2, Q3, quarter two, quarter three, which would take you into the summer, well into the summer. and fall. RWA, real world assets, which is again anything you can buy, including financial products, which would be a big one at first. And then you get into all the other stuff like real estate and things like that. And there's a bunch up there. Some of these are more like Ondo's the big one on that list. Ondo is a good one for with special financial products, and they have a close relationship with BlackRock, which we talked about earlier, and some others. So there's something to be aware of. So look into that. Proppy and Parkle are real estate more involved. So is Epic. And then you have RWA. I put RWA and you see a little FI there. So this is a thing. Sometimes it's like subsectors. So in RWA, there are some tokens that are available like with more of the financial aspects of that, like lending and stuff like that within RWA. So that's what those are: Plume, Centrifuge, Syrup, ENA, which is Athena. Syrup sounds funny, but it's a maple finance, so like maple syrup. So they changed the name of their token from maple to syrup. I don't know. It's just kind of funny. But and then you have some tokens that are more like direct AI related. And there's not too many because it's mostly part of something else. And technically, Tau, which I mentioned earlier, right? Tau is not itself AI, but they are like a huge marketplace for AI projects. They're considered by many to be the number one AI token in this cycle. FET used to be Fetch, but they created something called the Artificial Superintelligence Alliance. It's some real brainiacs out in California and stuff like that that have some pretty cool projects, and that's an area to consider too. And then DePIN, which is deregulated physical infrastructure. So these companies here, these three especially deal a lot with CPU, computer processing unit usage, and like it doesn't there's needs for that, and there's places that don't use all their CPU power, and you know that transaction between all of that. So and they do different things. So again, any of these you want to research: Aether, IO.net, Akash. These are all pretty solid projects for probably mid later this year, or like that. And some of these, like I said, some of these you might consider even putting a little bit in early and watching it, or just go in more now if you think, you know, if your own research tells you, oh no, this is like good right now. Like Tau would be good right now. Ondo would be good right now. Those are two right away on that list I would look at. And I think I'm not, no financial advice here. I'm just saying they look like they'd be good right now. Then down the bottom left, and again, I have infrastructure here, but I mean, there's nothing wrong with getting in that early. Some are more available, more readily working with the area of smart contracts I mentioned, which are in like these things that are inside the tokens, and that has a lot to do with tokenization and RWA, but they're more specific to that. So you have infrastructure coins, which are Chainlink, HBAR, which is also called Hedera, and some others there. ICP is Internet Computer. It's an interesting project. If it ever takes off, it'll be very cool. They're doing it's like a world computer type thing. Zcash is a form of privacy coin, electronic money. That's controversial and interesting area. Payments, as I mentioned earlier, XRP is the coin for Ripple, doing more the higher level, big level payment stuff. XLM is Stellar Lumens. There would be more of the lower level payments, like between us and you know, retail industries. You know, not the big companies, but stuff that we deal with more day-to-day basis. And then a lot of this stuff requires a lot of these different parts of this whole digital currency, as I mentioned, there's a lot of areas that aren't connected, and so you have these interoperability or cross-chain technologies that link things together. That's what those things are there. I had mentioned Flare earlier with regard to XRP. And those are good, again, anytime at all, but I wouldn't say they'd be the hottest thing right now. This is kind of like it's kind of like a heat index there, you know. And then further down the line, which I would call more emerging technologies, there are some DePIN projects that are further out, like OpenVPP has to do with the energy sector, which could be a big deal down the road. GeodeNet is like mapping. It's a whole technology of mapping the planet in a whole new and very sophisticated way, stuff like that. IoT, Internet of Things we mentioned earlier, robotics we mentioned earlier. These are more again, nothing wrong getting a little early, but they're more, likely to really catch fire end of the year, next year, possibly. Augmented reality is like virtual reality, only you have to look into how to define that properly. A little more sophisticated than just virtual reality. It's used in a lot it's used in a lot of technologies. And it's very AI related too, of course. And then deregulated science. I mentioned a lot of these are still on the indexes. Although RSC Research Coin, and by the way, Research Coin is the pet project of the CEO of Coinbase, Brian Armstrong. That's his little pet project. So that's available on Coinbase. So is Bio, which is Bio Protocol. That's another cool one. And what's the one I mentioned earlier? Oh yeah, Vita, VITA, Vita DAO, Vita DAO, it's called, but VITA, that's the one Pfizer put some money in. As you can guess, like cryo has to do with cryogenics. Q Bio is quantum biology. There's a lot of cool stuff that's early stage. So this is not a thing that would be like making you rich tomorrow. This is more late year into next year that it might be popping up. So this is like a flow to consider of like, let's use a basic figure of $100. You might, and actually, I think I got something on the next slide or coming up. Yeah, here we go. So if you're going to build a portfolio right now, for example, here we are in Q2 2026. This again is just an example of what might look like a portfolio. What's your own taste? Are you more a go for it person? Maybe you're younger and you're not so worried about losing a little money. You'll make it later. If you're more conservative and you don't want to take as much of a chance, a little different. So you could take those sectors we just talked about, like following the Clarity Act, let's say. You may not have to wait for it, because if you wait for it, other people are going to be jumping in maybe the day ahead of you. So something to consider. But if you want it to be more aggressive, then yeah, you might put half whatever you want to invest into DeFi, because that's the one, as we just mentioned on the previous slide, is most likely, not guaranteed, but most likely to benefit. And then spread out the rest into the RWA and AI and DeFi and all of those, and then some in the long-term infrastructure and payments, and then a little bit in that, emerging technologies with robotics and things like that. It would be more aggressive portfolio. You can even be more aggressive, of course. And then you'd have to decide what tokens within those sectors are the ones you feel, maybe you just do one in each, maybe you do a couple here, a couple there. And again, it depends how much time you have, because how much time you have to check and research. Some people have 4 crypto tokens, others have 14, others have 40, others have 140. It really depends what you think you can manage. And it's easy to find yourself like a kid in a candy shop too. So you gotta be careful with your emotions, again, as I mentioned, to not keep buying all these tokens, because then you're watering down everything. And if one of them does go up and you only have $10 in it instead of $100 in it or something, you'd be kicking yourself. So, I would sit down and have a conversation with yourself or your significant other and decide how many you think you can manage. And then, like I said, more conservative portfolio, yeah, you go more heavy into infrastructure and then spread out the rest across multiple categories, however you want to do that. So this is just an idea of how you can break up at a higher level what your investment strategy might be. Another thing I touched on just lightly, and this is important, is we have, and everyone has this, so everyone likes to think it's the big edge for them, but everyone's using AI, Grok, ChatGPT, stuff like that. There's good and bad parts to that, which I've done some homework on and experimented with. But, getting into discussions with AI over the crypto sector and that, the more general the discussion, the better. It's very good at themes and things like that. So you could ask it about, like, what are some of the new niche area? A niche area might be a combination of two things. So you have robotics and you have AI. Well, what about companies that are using AI with robotics? And so that's a combination or niche area. Though that could be something, more long-term or riskier, but sure could take off, right? The more niche it is, the more likely it could boom in price. And then you have collaborations, as I said, between some of these crypto companies, because when, they're both doing well, but one can help the other and the other can help that one, that can really create something new. They both got together and had a baby, and the baby is a lot better than either one of them. So that's something to be aware of. We mentioned some of the different things that could be catalyst earlier on that page. Mostly we were looking at positive catalysts, but again, I did mention token unlocks. Some companies sometimes have a schedule. That schedule might be that they unlock a little bit every month, and that usually doesn't mean anything. But some companies might have a once a year or once every 2 or 4 years major unlock where they dump like 25% of the remaining tokens. And that what you'll often see ahead of time is the price of the coin go down because people get out early, like start selling it and the price can drop. But then it might be an opportunity once that settles to buy in once the smoke clears. And of course, we mentioned events around crypto events around the world that are general or specific. Those are all things you can ask about with AI and just accumulate good information. And you learn yourself like how to ask questions and what type of questions to ask and what to follow up on. And anytime it uses a terminology or something that you don't quite understand, ask it AI programs to please explain this in simple language or what you would call layman's terms, right? And it'll do that really well. Don't ask it what to buy for a couple of reasons. First of all, AI goes out and gets whatever information is out there. As I showed you at the beginning on the second slide, on YouTube and elsewhere, there's just a lot of people out there that think they know something and put information out. AI could be scraping some of that up. It could also be old info because everything that was somewhat true of crypto up till about a year ago has really been turned on its head with like I said, the whole world now being, absolutely full speed ahead. And that's just changing everything. So it's best to try to find your own detailed information. I mean, you can ask, but just be careful because it can also be outdated. And the other thing is relating to human beings. I mean, data-wise, AI is finding good data, but AI doesn't understand how loony human beings can be. It doesn't take much to have some, token or anything in life suddenly take a bad turn or a good turn because some silly thing or some rumor went out or something like that. So AI has not a good vibe. It's not a good vibe reader. That's why I said Huang's definition of knowing the vibe. We're still better as long as we're getting good information ourselves, we're still better at reading the vibe of other humans than AI is still, thankfully. So again, just be careful using AI. And if you don't know what to ask, like I just don't know what questions to ask AI, this is what you do. First question, ask AI, what questions should I be asking about crypto? Start with that. Like ask the question of what questions to ask. And AI will generally say, oh, you might want to ask about this, that, or that. I'm like, great, give me some information on that so I know how to start, with this and with this other thing. So, start general and work your way down. I wanted to show you something here. We got a couple more slides here. We're getting near the end, I think. These are two images taken off a cell phone of Coinbase advanced mode. And we're looking at two different tokens. One on the left is Tau, T-A-O, which I mentioned earlier. Bitensor Tau goes by Tau, T-A-O. And that's the AI coin we mentioned. So if you look at the very top, I said what sector it's in, I have AI. And then the one on the right is something called Plume. And Plume is one that was RWA, but it's a finance coin within RWA. Okay. So I mentioned earlier that market cap is like the size of the asset, the size of the token, with regard to how many coins are in circulation times the price. And there's like large cap, medium cap, small cap, micro cap, depending on what the dollar amounts are. This one is actually considered like a medium cap on the left, 2.1 billion. It sounds like a lot, but we're talking some pretty big entities here. The large caps would be like a Bitcoin, obviously, and Ethereum and some others, but it would be like 10 billion and up, and Bitcoin's in the trillions. So it's kind of a good sized medium cap coin at 2.1 billion. If you look across to the right, you'll see that Plume is only 64.8 million. That's actually a micro cap. It's not even a small cap, it's a micro cap. So as I said earlier, smaller ones can be very volatile. Okay. It doesn't mean a big one can't suddenly do well either. And it doesn't mean that, a small one might not just sit there for a while too. Other information that I was able to glean by using the tools on this, you can look back, and I found that I like to look back to see, well, how's this coin been doing? So I'll look at like the past week, past month, past year. I don't go much before that. I don't feel a real need for that. But the 1 year high, so still within a year, what was the highest point? So the highest point for Tau was $538 per token. Okay. And you look on the right, the highest point for Plume was 25 cents. And that doesn't mean good or bad. It's simply that, one's been around longer and got a lot more people involved, and the other one is newer. Like I said earlier, if you make 10%, if you put $100 in each and they both go up 10%, you make, $100 in each goes up 10%, you make $10 on each of them. It's irrelevant to the price. The price just gives you an idea kind of the size of the coin and some other information too. And they both for the month, like at the time I did this was a month ago, March 9th, about a month ago. And for the previous month, Tau had gone up 18.45% up there, and Plume had gone up 13.93 for the month. So, okay, both doing very well. Had a good month, great month. If you look at the black boxes, let's start on the left with Tau. You'll see that to the left top, 193.42. That's the current price. Now look above at the 1 year high, 538. So you can see it's dropped down a lot. And crypto's volatile, and 2025 turned out to be a bummer of a year. That was supposed to be a good year for crypto. And a lot of that was based not only that on that 4 year cycle, which has been kind of thrown for a loop. I mentioned there's like a 4 year cycle, 2017 and 21. That was based around Bitcoin largely. But also the Trump administration getting elected in 24 brought a lot of high hopes. And the end of 24 was a big rally for crypto, huge. And then it just like started nosediving throughout 2025 because of the tariffs. And then the later in the year, the Genius Act in Congress, it was called, for crypto, that got passed. But then Clarity Act started having, hangups. So there's a lot of things went wrong. And that would have been bad enough, but because of the high expectation, a lot of it just caused an even bigger negative effect. So most everything in crypto went down last year, which is good news for anyone right now that prices are cheap. That's actually a blessing if you didn't put money in it, because you're getting it cheaper than a lot of these are worth a fraction of what they were a year ago. So that's another good reason to think about things like this. So Tau was about from this point to where it was would be about a 2.5 increase to get back to 538. So that tells you something. Okay, so if it ever got back to its high price of 538, and whatever money you put in now would be, make about 2.5 times, which is, imagine making 2.5 times your money with a bank. I mean, banks are paying what on average right now less than 0.4%, not 4%, less than 0.4% average on a savings account. So making, 2.5. So if you had $100, you'd be 250. Pretty good. Is the other interesting thing though. Look at Plume. Plume is currently at a price of 0.01265. So some of these prices can get really down to the decimals per Plume token. 0.1265. Look at the high price above. That's not 0.025. That's 0.25. So to go from the current price, 0.01265, up to 0.25, that's roughly, I'm just looking at it, I'm going to say roughly 20 times, or what they would call it 20x. So this coin has lost a ton of value in the past since its high. It went from a quarter per token, 25 cents, down to effectively over a penny. And that does not necessarily mean it's a horrible coin. Many times it does. Many times it's a dead project. This is far from a dead project. This is actually a decent project, which means that this is something, if you research that and see this and you read it's a good project and it's lost 90% of its value, there's a fair chance this could, if this rallied back to its all-time high, that would be a 20 times on your money. I mean, I'm just saying mathematically, I'm not saying it will, but so that's something, again, you need lots of info when you make decisions. The more info, the better. That's why Huang said, be in command of the data, right? So on the left here, if you look to some other things you can pick up, we'll just look at a couple things real quick. The low high here, I'm on the Tau side now, the low and the high. So this is for the day, not 24 hours. When you say the day, it's 24 hours. Doesn't matter what time of day. So the low price was 176.96. The high was 199. So you can see it's near its high
price near the high for the day. So it's something to consider. General rule in investing, you don't want to buy high, you want to buy low, you want to sell high. So this is one when you might say, well, this is looking good. I really like this, but I'm going to wait after lunch or maybe tonight or tomorrow. Wait and see if it comes down, and I might get it lower than 193. Maybe it'll go down to 190 or something again. I'll buy it then. That's something to consider. You look over at Plume, and Plume is 1265. Plume is at its low, 1264. It's almost exactly the same. It's at its low, and it had a high of 1496 here. So that's a nice little gap there. So Plume is right down. So you might watch it, make sure it's not dropping too fast any further, let's say. And if it starts to level off, generally speaking, if a coin drops down and levels off, that's usually, not always, usually a good sign. Whereas if it's been going up and levels off, that usually is not a good sign. It means it's hit a top and it's going to probably drop. So they kind of level off before they do the opposite. It's not all the time, but more than 50% of the time, put it that way. So Plume, when you see this, would give you an indication that, hey, that's not a bad thing here. It's at a bottom. Let's watch it a little bit longer. Like I said, grab a drink and watch it. This is set for a 1 minute scale, by the way. You see 1M here? They're both set for 1 minute. So this is what, 10, 20, this is like 40 minutes. This whole action here is like 40 minutes for each one. And you can set these for 5 minutes, 1 hour, 1 day, whatever. So this is a real tight, this is as tight as you can make these, is 1 minute intervals. And so you look at this and you're ready to panic, but it's really not a big drop. It went from 1285 to 1265. It's not a big drop for real. It just looks big because it's a 1 minute scale. If you put this on a 1 hour scale, it wouldn't even look like much of anything. Okay, so you got to always be aware, like if you use something like this, what you're looking at. So anyhow, this was taken then, and we're not doing this live. I was going to do a live event where I would ask people to which one would you pick if you were going to put money, if you had like $100, how much would you put in each? And would you like alter that like tomorrow or in a week or something like that? You can do that on your own. So yeah, you can get info from these like that in terms of the 1 year high versus that and how well it's been doing for the month, for the day, all these things to help you make decisions when you get down to the nitty gritty of actually considering putting money into a coin. Quick change of gears. I'm not going to spend too much time on this. I mentioned money supply, how that's a big thing, and there's a lot of money that has been, and even more will be coming into the markets generally, or into the economy generally. So we have all this money coming in, this big expansion of money that we're in the middle of, and it's going to keep going for a while. And you have this other peculiar thing going on called a contraction of human labor, which means AI is now doing more jobs that humans used to do. So there is a problem here. The article in the middle here, which I think came from the IMF, this article, AI will affect almost 40% of jobs around the world, replacing some and complementing others. So you have this weird phenomena of money pouring in, yet, people losing jobs and unemployment increasing. And that's kind of the general prediction. And some of the predictions are pretty radical. So as a side note, your own job, or if you have a child trying to determine a career path, you need to be aware of what jobs are even possibly going to be eliminated by AI. Because certain ones are definitely, and that's even like in the medical field and stuff like that too. There's certain things AI does so incredibly better, and then with robotics coming in too, there's another thing too that could be replacing jobs. Things are going to get weird, and this creates an odd type of what I call friction between these things. But again, where weird stuff is happening or problems are created, or this oftentimes is opportunities. And I hate to say like, well, capitalizing on people losing their jobs. And that's not really what I'm saying. But I'm saying if AI is coming in, it's replacing things, to be aware of, well, what's going on and what is AI, what companies with AI are going to be successful at doing that. That's something like to keep in mind regarding how you look at things like crypto too. More on that. Goldman Sachs, by the way, they hired a bunch of people and then fired to get AI going and fire and let them go. AI is not just replacing. In the past, when you'd have a new technology, it'd be a lot of like the low-level, grunt-level jobs. I hate to call it that, but that would get dumped, and then those people would go find another low-level job. But now AI is able to replace some pretty high-level, white-collar type, I guess you'd call it, type jobs, which is a new phenomena. So this is something crazy. This is an actual tweet, or whatever you call it these days, off the X platform that I grabbed. A discussion going on. This person person posted. This is slightly off. I looked into it. It's not false, but it's a little exaggerated. But they said Amazon made all these engineers, 2,800 engineers, spent 8 months documenting code and basically getting in the AI to work for Amazon, and Amazon fired them all. That's partly true. They did get fired and they did do that, and it's pretty sad. It's like giving somebody a shovel to dig their own grave. It's sad, but this has happened in more than one place. So again, that's just a side note. There's a lot going on right now with less jobs and jobs being taken by AI and stuff like that. And yet a lot of money's pouring in. So that's going to have a big impact on where that money goes. And it's going into tech, it's going to AI, it's going into these other projects that are related to crypto. So again, it has everything to do with what I said earlier about the next 6 months to 12 months. So it could be a very unique opportunity for those who are aware ahead of time, which is why I'm putting this video out, just give you the information. Because a lot of people, 95% of people are going to get caught off guard because they don't even know how to spell Bitcoin at this point. They just don't know. And by the time they hear it on the news, it'll minimally be old news. It will probably be a case like people buying gold last October, I mentioned, where it's already kind of late and they're going to buy in high and lose even more money. So unfortunately, that's the way it works. So here we are on this slide. And if you have, excuse me, if you have any questions or comments or ideas or anything at all that you want to talk about, or just get some, personally, just ask me. I don't give advice out to ever tell people you better buy this or you'll, like that. But I can be more specific outside of a public forum, with questions with people that they have. Sorry, I had a little glitch there, some distractions behind me. So as I was saying, feel free to find me on Facebook. Our Facebook group, which I'll be posting information in, is called Crypto Crossroads. If you can't find it for some reason, just reach out to me and I'll send you the direct link. I'll also be posting the direct link now and then. It's a new group, just started. I'll be putting out kind of like a weekly little, I don't know what you want to call it, message. Not exactly hot tips, but things to be aware of. Like if there's, any of those catalysts that I see coming up, I'll post it for people to be aware of. So it'll be kind of like a little extra bit of info for you. If you want to personally write me, email me, you can. Easier on Facebook to get a hold of me, I think. But if you choose, you can email me at that address, dahanu137@gmail.com. All right, so that's it. Best of luck. I probably will do more of these videos in the future. I also did an interview. It was recorded and still being edited, worked on, hopefully will release very soon, on other aspects related to this. Very, very different take than what we're talking here. But with regard to actually the crypto itself and things going on and possibly like investing in it and stuff like that. That's what this Crypto Crossroads is concerned with. So join if you want, email if you want, private, what do you call that? Direct DM me, direct message me if you want. And again, this was not financial advice. This was just information I've gathered over the last couple of years regarding what's going on now, but also in my close to 40 years of, researching this whole scheme that's been in the works for that long time in terms of a digital framework for money. All right. Thank you all.